Here is a strange fact about the very top of the income ladder. Almost nobody reaches the top 1% on a salary. Because at this level, the money isn't really a paycheck at all. It looks like income. It even arrives like income. But underneath, it is ownership wearing an income's clothes. And that is why so many people grind their whole careers chasing this rung, finally climb onto it, and discover a quiet, disorienting truth. The top of the ladder isn't a rung at all. It's the bottom of an escalator, a completely different machine that they never knew was there. Let me show you what actually pays the people at the top, because it is almost never the thing you think. Here is the plan for the next few minutes. First, I will place you on the very top rung of the salary ladder and give you two honest numbers instead of one, the sticker income everyone imagines and the take-home that survives the tax bite. Then I will show you the twist that makes this rung different from every rung below it. After that, 6 unlocks. 1. The top 1% is an ownership story, not a paycheck story. 2. The source of the money flips. Capital overtakes the wage. 3. The tax code quietly changes teams. 4. You get paid by many at once, not by the hour. 5. The high-income, low-wealth trap is deadliest right here. And 6. The real 1% question was never how much you earn. It's what you own. Then the recipe for how this last rung actually works. Let's climb up to the top. Picture the income ladder from the whole series, a tall ladder with numbered rungs, and you have climbed all the way to rung 6, the top one. Below you sit the floor, the median, comfortable 6 figures, the top 10%. And up here, roughly $250,000 to $1 million a year, is where the top 1% of earners lives. The very top of the ladder actually starts somewhere north of $400,000 a year, using one popular national earnings survey, rounded. This is the rung almost everyone points at when they imagine making it. You are standing on it now, and from up here, for the first time, you can see something the lower rungs couldn't. There's nothing above you. The ladder just ends. So let's do the honest math, the same 2-bar reveal we do on every rung. Picture a tall, hollow bar, the sticker income, call it $500,000 a year. That's the number that turns heads. Now beside it, a shorter solid bar, the take-home, closer to $300,000 after the tax bite does its work. The bracket between them, that missing $200,000, is taxes and deductions. The gap, same as every rung below. But here is where this rung breaks the pattern. For most people who genuinely reach the top 1%, the majority of that money was never a wage in the first place. It's ownership income, equity, business profit, capital gains, dressed up to look like a paycheck. The sticker isn't a salary. And that single fact changes everything about how the top rung works. Unlock one, and it's the foundation for everything else. The top 1% is an ownership story, not a paycheck story. Here is the thing almost nobody says out loud. You basically cannot get here on wages alone. Think about what a salary actually is. It's someone paying you for your time, and there are only so many hours in a week, and only so much any single person's hour can be worth before the number simply stops climbing. Wages have a ceiling built into them, and that ceiling sits well below this rung for almost everyone. So how do people actually reach the top 1%? They own things that pay them. A slice of a company, a business they built, a portfolio of assets that produces income whether they show up or not. When you look closely at who lives on this rung, you find owners of equity, of businesses, of capital, far more often than you find employees, no matter how senior the employee. The rare high-salary earner who makes it here almost always got the last decisive push from ownership. Stock in the company, a partnership stake, a share of the profits. The wage got them close. Ownership carried them over the line. So if you have been trying to reach this rung purely by earning more, working harder, climbing higher inside someone else's building, I want you to hear this gently. That path very likely tops out below where you're standing in your imagination. The people up here didn't just earn more, they owned something. That's the real dividing line at the top of the ladder. Not effort, not talent, not even income. Ownership. Unlock 2. At this rung, the source of the money flips. This is subtle, And it's the single most important shift on the whole ladder, so stay with me. On every rung below this one, the floor, the median, comfortable six figures, almost all of your income is a wage. It's the paycheck. Salary is basically the whole pie. You might have a little interest from a savings account, a small dividend here and there, but the wage dominates completely. It's 90-something% of everything you bring in. Now watch what happens up here. Picture that same pie again, but the slices have rearranged. The wage, the salary, the actual paycheck, has shrunk down to a thin little wedge, and the rest of the pie, the big majority of it, is now something else entirely. Business profit, equity, dividends, capital gains, income that comes from things you own rather than hours you sell. That is the flip. It's not that the top 1% earns a bigger salary than the rung below, though they often do. It's that the composition of the money has fundamentally changed. The kind of income changed, not just the amount. And this matters enormously because owned income and earned income behave like two completely different animals. Earned income stops the moment you stop working. Owned income doesn't. Earned income is capped by your hours. Owned income scales past them. So when you see someone on this rung, don't just picture a huge paycheck. Picture a pie where the paycheck is the smallest slice. And understand that the flip in the source is the whole reason the top rung exists at all. The size of the number is the headline. The change in its source is the actual story. Unlock 3, and this one surprises almost everyone. Up here, the tax code quietly changes teams. On the lower rungs, all your income is earned, a paycheck, and a paycheck is taxed about as heavily as income gets. Every raise you fought for got a real bite taken out before it ever reached you. You felt it on every rung climbing up. But owned income, the money that comes from equity, from assets held over time, from a business you own, is generally taxed far more gently than the same dollar earned as a wage. I'm not going to name agencies or quote exact rates because the numbers shift, and this is education, not tax advice. But the direction is the point, and the direction is remarkably consistent. The system is built to reward ownership. A dollar you earn by selling your hours is treated one way. A dollar that comes to you because you owned something is very often treated more kindly, sometimes dramatically so. Think about what that means on this rung, where most of the income is already owned income. The person up here isn't just earning more than the rung below. They're keeping a bigger share of every dollar, too, because more of their money arrives through the gentler door. It compounds the advantage twice over. This is not a loophole, and it's not a trick. It's simply how the code is written, out in the open, favoring owned income over earned income by design. And once you understand that the tax scale itself tilts toward owners, the lower rungs make more sense too. The paycheck was always the most heavily taxed way to get paid. Up here, people have quietly stopped relying on it. Unlock 4. On this rung, you stop being paid by the hour and start being paid by many at once. Think about how income works on every lower rung. You do a unit of work, one person or one company pays you for it, and that's the trade. Your time for their money, 1-to-1. It's honest, and it's also capped because there is exactly one of you and only so many hours. Now here is what changes at the top. The people on this rung have almost all built some form of one-to-many leverage, a way for a single unit of their effort to be paid for by a crowd instead of by a single boss. A product that thousands buy. Equity in something that scales to a whole market. A business with employees whose work lifts the owner. An audience. The mechanism differs, but the shape is identical. Picture a fan opening out from one person to a whole crowd of faceless figures, and every one of them sends a little money back. You build the thing once. Many people pay for it many times. And the profound consequence is that your income decouples from your time. On the lower rungs, if you stop working, the money stops that day. With one-to-many leverage, the thing you built keeps getting paid for while you sleep, while you're on vacation, while you're building the next thing. That's the real engine under the top rung. It isn't that these people work more hours. They physically can't. The day is the same length for everyone. It's that each hour they do work gets multiplied across many payers instead of billed to one. Decouple your income from your hours, and the ceiling that trapped every rung below simply lifts. Unlock 5, and it's the warning at the top of the ladder. The high-income, low-wealth trap is deadliest right here. Because everything I've described, the ownership, the flipped source, the leverage, is what the real top 1% looks like. But there is another figure on this rung who looks identical from the outside and is living a completely different story. The person with an enormous paycheck and almost nothing to their name. It is entirely possible to earn a genuine fortune up here and own basically nothing. Picture it. A $500,000 income, all of it a wage, taxed at the heaviest rate, and then spent almost as fast as it lands. The bigger house, the bigger car, the lifestyle that expands to swallow every raise. This person earns more in a year than most people earn in a decade, and yet they own no slice of anything, no business, no meaningful pile of assets. Their income is spectacular, and their wealth is a mirage. And here's why the trap is deadliest on this exact rung. The income is so large that it hides the problem completely. When you're pulling in that kind of money, it's almost impossible to feel like you're doing anything wrong. The lifestyle is incredible. Everyone assumes you're wealthy. You assume you're wealthy. But a huge income with no ownership underneath it is a spectacular-looking dead end. The moment the paycheck stops, the whole thing collapses because there was never a machine underneath, only a very large hose. High income and high wealth feel like the same thing up here, and they are not. One is what you earn. The other is what you keep and own. And on this rung, more than any other, people confuse the two, right up until the income stops. Unlock 6, and it ties the whole rung together and points beyond it. The real 1% question was never how much you earn. It's what you own. Here is the single question that separates the two figures we just met, the owner and the high earner who owns nothing. What do you own that pays you while you sleep? That's it. That's the whole test at the top of the ladder. Not your title, not your paycheck, not the number on the sticker. What do you own? Equity, a business, assets that produces money without you trading an hour for it. Because that is the thing that actually defines this rung, and it's the thing that carries past it. And this is the exact bridge to the other half of the story. There's a companion series about net worth by decade, and its whole spine is one line. Build the machine, not the pile. The pile is what you earn and accumulate by hand. The machine is the set of owned assets that generates money on its own, whether you show up or not. Everything on this top rung is really about the machine. The salary was only ever the fuel. Ownership is the engine. So if you've climbed this whole ladder measuring yourself by your income, by the sticker, by the paycheck, by which rung you're standing on, I want to hand you a different measuring stick right at the top. Stop asking how high you've climbed. Start asking what you own that climbs on its own. Because that question doesn't just define the top of the ladder. It's the question that reveals there was a completely different machine standing next to the ladder the entire time. And that's exactly where this series is heading. So how does the top rung actually work? What do the people who genuinely belong here do differently? The recipe is not earn a bigger salary. It's 5 moves, and every one of them is about ownership. First, own something. Equity, a business, or scalable assets. Don't just earn income, acquire the things that produce it. This is the move that separates the top 1% from everyone below, full stop. Second, convert peak income into owned assets fast before lifestyle claims it. When the big income arrives, it comes with the loudest temptation you'll ever face to simply spend it. So root it into ownership quickly while you still can. Before the bigger house, And the bigger everything weld you to the paycheck. Third, use the tax code's ownership bias deliberately and legally. The system already rewards owned income over earned income, so structure yourself as an owner on purpose and keep more of every dollar. Fourth, build one-to-many leverage so your income decouples from your hours. Find the product, the equity, the business, the audience, the thing that many people pay for while you sleep. And fifth, measure yourself by what you own, not what you earn. Track the machine, not the paycheck. Do those 5 things and you're not climbing to a higher rung, because there isn't one. You're stepping off the ladder entirely onto something that carries you up without your legs, which is exactly the surprise waiting at the top. So tell me in the comments, up here at the top, does your money come mostly from a paycheck or mostly from things you own? Be honest. The answer is the whole game. This is education, not financial or career advice, just the honest map of the ladder, top to bottom. And next time is the finale, where the whole picture finally snaps into focus. The ladder was a lie, and there's a completely different way up that beats every single rung we've climbed. You've reached the top. Now it's time to stop climbing and get on the escalator. I'll see you there.